Bloomberg Audio Studios.
Podcasts, radio, news.
I'm here with Jane Fraser, the CEO of Citi Group, and she is joining us, of course, to speak about women, money, and power and the future of finance. And for you, Jane, what is going to be the biggest ground shift in the world of finance over the next 5 years?
I think that geopolitics is probably going to be the biggest ground shift that occurs in the world of finance. We've seen, and I mean world from the global perspective, we've seen so many shifts in the lanes. I see technology flows changing, where they're going and the nature of them, particularly with AI, data centers, energy flows to support them. We've seen food, we've seen the green transition and energy flows changing. So there's an enormous amount happening anyway. Geopolitics is sort of the unknown, but is certainly going to be a big differentiator. And then you have technology, and that will both be exciting, but it could have some risks associated to it too in an AI world.
To that end, what role is AI going to play in the future of finance?
We don't know exactly what role AI will play, but we know it's going to be a big and important one. And we're learning at the moment. We're at that phase of how do we learn, how do we move fast enough with it so that we're adapting, we're seeing what it can do. It's impacting productivity largely at the moment, but I'm sure it will be affecting competitive edge. It will be affecting the configuration and the nature of some businesses. You also don't want to go too fast because you want to make sure that you've got the right risk mitigants in place, because there are risks associated with this for consumers, for investors, for ourselves. So it's a fine balance, and we're all learning how to do it. But it is exciting.
You mentioned geopolitical risks being one of the biggest risks in the future. You run the most global U.S. bank. How does that give you a different view than perhaps your rivals?
Oh, we operate in 160 different countries. We're on the ground as a local bank in almost 100 of them, many of them for a century. So we're not talking suitcase bankers here. We're talking about really seasoned individuals and a network that has extraordinary flows. We have almost $2,000 trillion of flows go through our pipes every year for 5,000 multinationals. What it means when you've got a network of that scale and capability is you're helping clients with growth, you're helping them navigate volatility, you're helping them be able to move different parts of their operations to different places in the world as these flows occur. So it really gives us a unique opportunity here to differentiate ourselves.
Given the world is changing so quickly, where is the most promise over the next 5 years? And what regions of the world do you see as lagging?
I always like to talk about bright spots first. So I think the bright spots is America. As you talk about a lot of roads leading here, fantastic entrepreneurship. I mean, this country is incredible. I love how Japan is turning up, focused on returns, moving from savings to investment, entrepreneurs also on the front foot there. So that's exciting. Most of ASEAN as well, really adapting and adopting a lot of new technologies. The Middle East is a different Middle East. As a woman, I find it really exciting to go there and see how quickly it has changed, and the female population is being unleashed in many of these countries in a very positive way. And I wouldn't forget Brazil and Mexico as areas where we're also seeing tremendous innovation. So I think those are, that's a pretty broad group of winners there. Europe has a tougher time. They've got some more structural challenges. Labor market is not as flexible. They don't have the scale that the States has, and they've got some challenges in terms of competitiveness. So that would be a quick walk around the world of the highs.
While the world is changing, so too is the world of finance.
Yes.
In particular, you've seen for many years now the banks cede some share to the non-banks, and you made a lot of news this year when you struck a partnership with Apollo, a $25 billion partnership in order to provide more private credit to your clients. Where do you see the private markets going at the end of the day?
When you look at a transaction and a partnership like the one we have with Apollo, you're looking at a win-win. And as we look at it, we're marrying our strength in origination and some of their power on their balance sheet in areas that we can't compete with them on, and put it together in 1 + 1 = 3 for our clients, because we're still giving our clients choice. And I think that's what we see the private market as. In non-investment grade clients in particular, and companies, is giving them an additional market to tap into. Some points, the private and public market, there's no arbitration between the two. Last couple of years, you saw the private market advantaged. The goal here from our perspective, give the client as much choice as possible. Again, what does it mean? I come back to America as a proud immigrant. What you see here is the depth and breadth of capital market. We have 50% of the world's capital market. We keep innovating. The scale and specialization it affords is really tremendous. You just don't see that as much in the rest of the world. And that, I think it means, why does the US keep being the winner in the global financial and capital markets? It is because it deserves to be.
At that end, too, what is the biggest risk to the industry over the next 5 years? Where do you have to look around the corner the most?
The piece that keeps me up at night is always cyber risk. And I think when we think about fraud, AI, and cyber, and the sort of convergence of those capabilities, and the speed with which activity can be done now, and that compute is going, that definitely continues to keep me awake at night the most. So I think that is the larger threat. At the end of the day, this industry is about trust. And so I think all of the larger institutions are putting a lot of resources to make sure that we can protect our institutions and our clients.
Jane, where do you see Citigroup in 5 years? You have embarked on this massive transformation. What is your greatest ambition?
Oh, well, my ambition is to be a high-returning, high-quality earnings, modern, simpler institution that continues to play a shaping role in the global financial system. We're truly privileged to be in as many locations as we are, with a talent base with such a global mindset and an ambition about it. So I think about, we've got the right strategy and vision, we're executing with the right organization, we've got making sure we've got the right talent and culture in the firm, and that we're a simpler, well-controlled, modern organization. We'll have got the job done.
If you could give yourself a grade on the restructuring plan, what would you give yourself?
Oh, we aren't done yet, so I can't give ourselves a grade yet. I've always said that this is a multi-year journey. We're going to be very disciplined about making sure that we don't take shortcuts. And the problem with grading yourself along the way is it becomes too tempting to do a quarter-by-quarter grade, as opposed to we're just very, very focused and accountable for delivering what the end product looks like.
Speaking of the end product, you've set out a goal to bring returns on tangible common equity closer to 11 to 12%.
In the medium term.
And
beyond after.
So Bloomberg consensus this year has Citigroup's return on tangible common equity at 6.8%. What do you say to critics that feel like you're not getting there fast enough?
Oh, we have undertaken a multi-year major transformation of an institution. We are working with ambition, with accountability, and with urgency. So we've already divested all but one of our international consumer franchises and wound down those that we couldn't. We've undertaken a massive reorganization of a company of 240,000 employees in 6 months, such that 50,000 people have a different manager than had 6 months ago. Now, it's been major change. We're being bold. We're ambitious. We're holding ourselves very much to account to deliver on the outcomes we should do. And I say, look at the proof. We're delivering, and we're determined to keep on doing so.
Now, you had set out to cut 20,000 jobs. It was a sizable restructuring. Can you rule out the need to cut more jobs in order to meet more expense and return targets?
Look, we're transforming the organization. So as I look at the modernization agenda right now, it's really going to be focused on process simplification and efficiency. And I get back to AI as an example. we see AI as a tool that will help augment our people. And as I talk to clients across the board, when they talk about their technology teams, they're not looking about shrinking them. They're looking about how can they do more with them and help support them. So really for me, the main transformation on our people front is going to be how do we make sure that we're giving them jobs that they feel are rewarding, increasing their productivity and their effectiveness, and trying to get rid of other areas of bureaucracy or clutter, whilst we improve the risk and controls and modernize the infrastructure of the bank. We'll do what we need to on that front.
There's some areas you've also targeted for a lot of progress, and as a growing part of Citigroup, wealth in particular, services as well. You have said to us that people have been very excited lately to be working for the services business even more than even some other parts. How do you see those parts of the business being a larger part of the Citi story?
So when I took over as CEO, it was very clear to me that we needed to grow our fee revenues and our fee businesses. We were underweight in that. And as I looked at the four global businesses to fit together, wealth, services, banking and markets, there are a lot of synergies there, but we were just underweight and underplaying what we should be doing on that front. So wealth, Andy has laid out super strategy. It's very clear. It's really delivering. We're seeing it this quarter with some major proof points that came through. The goal here is the investment revenues. We have $5 trillion of assets under management that our clients have that they don't have with the bank. We need to be capturing our fair share of that by focusing on having a great investment platform and then making sure that our people are going out and helping our clients create wealth. I don't think of us as much as a wealth franchise for retirees as a helping the world's wealth creators outside the States in doing that, be it our commercial bank, our wealth franchise, our banking franchise. So those are the areas that we really see exciting promise and that Andy and the team are really delivering on. I'm pleased with them, but we've got more to go.
We've talked before about also a new head of investment banking and ambitions to gain more share in investment banking. Where do you see this going? How much further can you push to gain share? How much more share can you gain?
Viz, who joined us fairly recently, and Achintia and the team really married in well with our existing team. We've been investing for a few years in technology, in healthcare, in different areas that frankly we were underweight in from our talent, and we're now really starting to see the proof coming through of those investments as that team more than gels but builds enduring relationships with our clients as trusted advisors. And you can see it. We've had revenue share gains in all these different areas and in banking overall. Our intention is just to keep going and building that through. I don't expect wallet will grow enormously over the cycle. We'll certainly see it in the short term. So we're not hanging our hats on an enormous wallet expansion over the long term, but we are going to hang the hats on the market share and wallet share gains that we are and will continue delivering.